Okay, where do I start? Welcome to the weekend video. This is Enda here from bullwaves.org, and been a heck of an interesting week again. I think I say that every week, but maybe I'm just overly interested in the market. I should get something new to think about. I have screaming kids downstairs, so if you hear an overlapping wailing sound, well, don't worry, that's just a 2-year-old. So I'm going to start, go through the 9 markets. Let's give a wrap up to this week. Friday again, the week has just disappeared. And yeah, well, let's see if we can kind of orientate ourselves for next week. As always, there's always caveats on what I think might be happening right now. So it's good to kind of keep a kind of cap on that as well. Alrighty, so this is a euro dollar. And you can see that that's the big, very large B wave that we're moving out of right now, and I'm expecting a very large C wave down to euro destruction. That's what I expect. We'll see how that goes over the next couple of years. Okay, so down off the high we have a 1-2 pattern, and there's also the idea or the possibility of a larger 3-wave pattern, especially given the fact that we've got this 3-wave decline off the recent high marked wave 2. Okay, so let's get down to the 4-hour chart. That's the recent high marked wave 2, and the decline off that has been in 3 waves so far. This can be, I am, let's say, interpreting this as the most bearish outlook, and that would be a series of 1-2 waves, which would kind of culminate in a large decline in a 3rd wave. But still, the caveat there is that this could be 3 waves down in a larger flat pattern, so that'd be 3 up, 3 down, and then 5 up to complete a C wave. And again, the 50% retracement level there at about 119.20, that would be the target if we were to get that alternate run up in a C wave. So let's get down to the short-term chart to take a look at this one, this structure here. So there, that's the 3 waves down off the wave 2 high. And like I said, it's labeled 5 waves down, 3 waves up, 5 waves down, and a possible ongoing 3 waves up. It looks like wave B completed today. It could be an expanded flat wave B, or else you could put wave A high there at the recent high. I'm not going to do that because I'm not going to do that. Okay, so it's distinction without difference, really. So I'm going to say that that's an expanded flat. And the B wave low should stay above support there at 112.99, so 113. And we should, early next week, we should get another spike in wave C to complete a 3-wave correction in wave 2. And then going towards the end of Tuesday and into Wednesday, we'd be looking for a break of support at 12.99 again, 120. Let's call that 113. And that would be an indication that we're getting a decline into a 3rd wave. So it could be Eurodollar could prove a little bit choppy over the next week or so, because even if this pattern does play out, we would likely get another impulsive decline with a 3-wave correction. So it'd be kind of like a minor inverted head and shoulders there around that 2nd wave. Okay, so the outlet for next week is to watch for a break of support in a possible 3rd wave down. And if we get a break of resistance at 116.23, that'll indicate that the alternate count, one of these alternate counts, is more likely. Okay, so that's euro dollar. So this is pound dollar, and again, that's way back in 2016 low. I've marked a type of a correction up into a 4th wave, and we're now moving most likely down into a very large 5th wave. So the idea here is that we have a 3-wave correction ongoing, and the reason I switched to that yesterday was the nice spike that we got off the recent low. So you can probably, if you can kind of discern what might happen in euro dollar next week, is if the dollar continues to weaken in the short term, well, then euro dollar will again switch to the alternate count, and we will work with a larger corrective pattern in euro dollar also. But let's get to the 4-hour chart and dollar yen. You can see that the spike higher is mostly impulsive, and it's hard to count that as a corrective pattern to the upside. So I am expecting the continuation higher early next week to break resistance there. That'd be 38% retracement level there, 133.17. So that's the immediate, initial target, let's say, for wave C and to complete wave 2, and that'd be a flat correction wave 2 also, with 3 waves up in A, 3 waves down in B, and then a 5-wave rally in wave C, so to complete a 3-3-5 pattern. Here's the hourly chart. You can see that you could move this 1-2 pattern maybe up slightly, but again, it doesn't really matter in terms of pattern, because I can see that today again is most likely an expanded flat, so you can see that that's probably a 4th wave, and then we should get an extension higher in wave 5 to complete wave C. So next week support here at 129 should probably hold wave 4, and I don't want to see any break of that little spike high there that is about 128.30. So I want to see that hold, because wave 4 shouldn't break wave 1 anyway. And unless, of course, you were to push wave 1 up higher here into Thursday's high and mark this expanded flat as wave 2, well then, if that's the case, then we'll push higher, probably up into 135s before this C wave and wave 2 completes. But for now, I'll try and be, let's say, on the more reserved end of this, and we'll look for a push into the resistance level there, 133. Okay, so that's pound dollar completed. Dollar yen is, of course, continuing to be an enigma in the longer term. In the short term, it's working out okay, but in the longer term, I'm kind of leaning towards this triangle that I'm showing on the daily chart here. So that'd be, right now I'm showing wave B in red here at the 2016 low, and that was 99.50. But you could also count this whole move off the wave A high as an A, B, C, D, and a possible E wave ongoing as a triangle rather than a series of 1-2 waves. And to be honest, either way is both. Or sorry, let's rephrase that. And I have to wake up. Both ways you look at this, short-term correction and an ongoing rally then in dollar yen. And the long-term rally suggests a break of that 139 high there, probably up to maybe even 150 before this completes. Okay, so that's the daily chart. Let's get down to the 4-hour chart. You can see I'm tracking a possible double combination wave in wave C. In wave 2. So that would be 3 waves down in A, 3 waves up in B, and then 3 waves down in C. So that's it's a complex pattern, and it's proving complex. The internal correction here is causing trouble today, but I think this should probably move back down into trend again next week. We should see a run lower. Maybe even by the end of next week, we could see the end of this C wave. If it's a typical 5-wave pattern, then it shouldn't take more than a week to complete. And we would be looking at a pretty significant low coming in dollar yen at that stage, in either a wave 2 or a wave E. So let's get to the hourly chart. Today again, we had another little run up towards resistance. So it does put pressure on the idea that we're already down in wave 1, and this is a correction higher in wave 2. Although that is 3 waves up. So let's see before the close if resistance holds and then we get a push lower again. That could turn into a 3rd wave down. And next week then we will be on for a decline in a 3rd in wave 3 of C. I'm doing this on the fly here again because that's just the way I roll. So it'll be wave 3 of C of 2. Some people have been questioning, why don't I use the WXY? And the reason is it just annoys the head off me. So I just use ABCs for corrections, and Roman numerals or 1, 2, 3s, normal numbers for impulse waves. Okay, so the alternate account here is it's a probability, but not a very large one. Is the idea that wave 2 here has already bottomed, and we have a 5-wave rally in wave 1 of the ongoing bull run up in dollar yen. I'll leave that on the shelf for the moment. I don't think that's going. I'm more confident in the current wave count. So for next week, yeah, continuation of the decline, possibly a continuation of the decline. We'll watch this on the daily update or the nightly updates to see if we get a push towards the previous B wave high. If we do, we may well switch. Anyway, that's neither here nor there. For the moment, I still want to see the completion of this large double combination wave down at the target there at about 109.70. Okay, so let's go to stocks. The stocks, the Dow is down again today after a spike in the futures. The Dow is back down again. You can see it's pushing down towards the daily 200 MA. Not good. Well, good for me for my outlook, but not good in general for the economy. Right now, we're kind of in this little kind of nowhere zone between the MAs. So, kind of watch this. There's a possibility that there's a larger correction ongoing here. But for the moment, I'm going to stay on the. I'm going to presumptuously stay on the, or preliminarily stay on the bearish side. So that's the daily chart there. Okay, we've got the 4-hour chart. You can see here the way the price is hanging between these two MAs on the 4-hour chart. I like the fact that it's come down nicely off the recent high. That was advantageous for the current wave count, and I'll get into that in a second. But what I'm doing here is tracking 5 waves down and an expanded flat correction wave 2. And I should move that in there, so I should really wave 2. And I think wave 1 was here. So an expanded flat correction wave 2. And the idea, the alternate count would be we have a larger second wave, maybe zigzag correction going on here. So let's get down to the hourly chart. Okay, so we have a possibility also of a larger wave 1 here, and the idea would be a larger zigzag correction there, and that would play out over the next few weeks. And in that case, then we'd probably just get a stagnant market for a couple of weeks with kind of, let's say, pretty heavy daily ranges, but it would kind of stick within this kind of this zone here between the upper 25s and the upper 24s. So that kind of 1,000-point zone would probably bounce around in there if the alternate count is correct. But for now, I think we've got 5 waves down into wave 1 here, and then the reason why I'm favoring this really is the fact that this portion of the pattern here is a pretty damn good three-wave pattern. It was retraced fully, so that suggests a central portion of a larger correction. So we have 3 waves up in A, 3 waves down in B, and then a 5-wave pattern to complete wave C. And then again, on top of that, the fact that we've come down right down, I would even suggest that if we break into 25,000 again, we push into 25,000, maybe even by tonight, although this final candle here, or this candle at the moment, is holding up quite well. We'll see how that plays out later on. in tonight's update. But the fact that we're down sharply today, that kind of does point me in the direction of the immediately bearish wave count. So for next week, we kind of watch for this off the wave too high early next week. We want to see the completion of another impulse wave. I know we're always looking for damned impulse waves, but that's just the way it is. We want to see a kind of a bearish lower high again, with the possibility of identifying some nice key levels. And now I do like the fact that we're down near 25,000 again. I've said that again. I'm just thinking on the fly here. I'll probably elaborate a little bit on that tonight when I update later. So for next week, I think the Dow is looking pretty. If the current wave count holds, the bearish wave count, the Dow is looking pretty. It's looking on shaky ground at the moment. And even the alternate count suggests a decline in a possible B wave. So next week is kind of primed for a decline phase again. And I do, again, like the fact that everybody's so damn bullish again. It's like as if nothing ever happens. They just jump right back on the bull train. Yeah, I get that pretty much covers it down. Let's move on, Enda, before you start stuttering. Yeah, right, okay. Let's get on to gold. That's the Dow weekly or daily chart again. Okay, so this is gold daily. We've moved up higher again in gold this week, and we've kind of corrected, or we've the rallies have been impulsive and the declines have been corrective. So again, that always it augurs well for the bullish outlook. So again, in general, I'm kind of looking for a large rally in a third wave. So that's the outlook for, let's say, the next year or so. And we have the 4-hour chart here. The possibility, we're kind of hanging between two counts at the moment. It looks like we're within wave 3 up anyway, but there's a decent chance that we are. This interim high here this week was just wave 1 of 3, and the corrective decline was wave 2 of 3. So we could be working on wave 1, 2, and a third of a third next week, which would push us probably back up towards the 1300 level again. And wave 3 in general should probably push us back up there. But excuse me. Yeah, let's get to the daily or the hourly chart just to see how that's played out. A nice spike yesterday, flatlined again today, which was possibly either wave 2 of 5 or wave 2 of 3, depending on which way you look at it. As you see, the alternate count here shows a 1-2 pattern, and that is again very viable with an expanded flat correction wave 2 alternate. Sorry, as an alternate count, or we have wave 1, 2, 3, 4 completed, and now we're working on wave 5 of 3. And to be honest, I'm leaning in favor of the alternate count right now, but we're probably 50-50, and there's no point in just changing it just because of that. I think if we move up and we take out that 161.8% level there, I think we'll shift to that alternate count, and that would be even more bullish in the short term. Okay, so that's gold. Let's get to crude oil. Okay, so that recent high that we tracked was counted as wave 4 complete, and now with a bit of luck we're moving down into wave 5, and long-term targets is for us to take out that previous wave 3 low. So that'll be about $26. So the outlook is for a push down towards the $20 handle again, somewhere in that range. And if the bear market does play out like I expect it to play out, and we do get like an extended phase of recessions or repeated recessions, or if you want to call it a depression, there's no reason why oil could fall and stay down there for an extended period of time. People would call me stupid for saying that, but you would wise, I can't get the damn thing to. Let's go to the US weekly chart. You would be wise to look back, beyond the 2000 level. The year 2000, and oil was trading at $10 a barrel. So there's no reason to say that it can't go down there again. Okay, so that's the 4-hour chart. Enough rambling. I think we've got more or less wave 1 complete, and again, this is it's just as viable to count this as wave 1 at 1 higher degree. So I'm able to do that by this evening. So suffice to say that we've got a wave 1-2 pattern underway here, with wave 1 down more or less pretty complete at the moment. And it does kind of add weight to the bearish outlook, given the fact that we've broken those, or today's lows again broke below the previous low of June there. So we have that kind of running flat wave 2 or wave 4, sorry. The lower extent of that fourth wave has now been broken. So that pretty much rules out the idea that this was a move up in an impulse pattern, and this would be a correction. So, which is pretty much expected by the large swath of the market, really. Either way, I think we've got 5 waves down complete, and we should be moving into a kind of a corrective phase again in 3 waves up in wave 2. So let's get to the hourly chart. We're approaching that lower trend line again, although the steam has kind of has fizzled out. The decline has kind of fizzled out now. But I can't rule out the idea that we push down towards that lower trend channel line again. Fifth waves tend to do that, but we will see on that front. This could be wave 3 of 5 right now, and we could even be working on wave 4 of 5. So if that's the case, then early next week we'll punch one last low in wave 5, and then we'll start on a 3-wave pattern higher in wave 2. To complete wave 1, and then we'll move 3 waves higher in wave 2. So the outlook for next week would be possibly one more low in wave 1, but for the bulk of next week, we'd be looking at, and maybe even the following week, we'd be looking at a run higher in wave 2. And the initial target would be the previous fourth wave, and that'd be about $68. So yeah, the range would be between $68 and $70. We've got kind of 2 shelves there, previous kind of resistance. So you'd kind of look at that area as a possible target for wave 2. Once that completes, then we've got a very large degree impulse pattern complete off the high, and the outlook would be for a long run down into a 3rd wave. And yeah, we'll track that when it comes. Okay, so let's move on to the S&P. And again, the S&P is more or less a similar outlook to the Dow. So with one caveat, the fact that the S&P had a thrust from a triangle as wave 5, so that wave 4 there was a clear triangle rather than the Dow, which was a running flat. So if you take that as a triangle, then we have completely broken that level of 2700, and the market has broken the bullish pattern, and we are pretty much confirmed to be running down into a new bear market now. Again, the caveat is, how does this correction play out in wave 2? And let's get into the 4-hour chart to start parsing that out a bit. Again, the S&P is down quite hard today. We're back down towards that 50 MA on the 4-hour chart, and we have that previous fourth wave support there. So you have, previous fourth wave support there at 26.91, and we're coming back down towards 26.91 again. I think if we break 2600 next week, which there is every possibility that we can do that, 100 points, 100 S&P points in a week, no problem, especially if we're moving into a 3rd wave. But if we do break 2600 next week, I would really watch out, because we could. There's every possibility that we run into a kind of a crash phase scenario where you know, we move down, 500 S&P points in a month or something like that, or even more. But probability is kind of, it's not, I would favor kind of a more, let's say, graduated decline from here, but there is every possibility that the kind of crash scenario happens before Christmas, and then early next year we have this kind of recovery phase, and that crash scenario would happen in a kind of a large third wave down and fourth and fifth wave down. So you'd kind of break into the low 2000s again. So you'd probably push towards 2200 or something like that, or 2100 even. Okay, that's the 4-hour chart. Let's go to the hourly chart. I'm marking today's decline. We got a break of that 2700 level, as I said today. Or sorry, 2707. So that was the previous wave B high internally there. So I have an expanded flat in wave 2, and the idea would be that today's sharp decline off that is the beginning of wave 1 of 3. Or sorry, wave 1 of 1 of 3. So we're looking for 5 waves down again next week, back below this kind of declining trend channel, or sorry, trend line, and that would pretty much just wipe out any gain that had been made. And you would look for 5 waves down to complete wave 1 and 3 waves correction again. So you kind of have this interim little head and shoulders pattern with the left shoulder, the head, and then a right shoulder, and then a breakdown. We have a previous second wave there. Who's texted me? Nobody knows me. We have the previous second wave there at 2632, and then we have the low at, obviously a break of the low pretty much confirms the third wave down, a low at 2600. So as I was saying, if we get a break into 2600s again, we're pretty much confirmed for a third wave down, and that would be a real, watch out and hold on to your hat, because it could be a very wicked November and December, actually. Okay, early next week, that's what we're watching for. We'll watch for the development of an impulse, a bearish impulse wave off the wave 2 high. And again, the alternate count, let's get shapes. You can tell that this video is not edited, and I'm not doing a voiceover afterwards, as I'm doing this on the fly. Okay, so the alternate would be, again, just like the Dow, would be a zigzag pattern. So you've got 5 waves up, 3 waves down, and 5 waves up. We'll see. Like I said, the 2600 level is key from here. Okay, so let's move on to silver. Where are you? There you are. So this is the daily chart in silver. I like the action in gold more than I like the action in silver, but I'm long silver as well, so it's because it's the little brother. It's a pretty damn complex correction. Wave 2. This is wave 1. A nice pattern higher in wave 1, and this has been a long, drawn out 2-year correction in wave 2. I'm marking it as a double combination, or sorry, yeah, double combination with a central triangle wave. You could even call it no, I won't get technical on it. So a triangle wave B, you can see that A, B, C, D, and E, and this triangle here made silver damn hard to track over the last couple of years, or over the last year especially. As we had these nice interim rallies, which were kind of suggesting a move to the upside, or that a third wave had begun. Excuse me. But for now, we're looking at 3 waves down, triangle, and then 3 waves down to complete. And for now, we're pretty bullish in the short term. So let's get to the 4-hour chart. You can see that I've marked a wave 1, 2 pattern, and this pattern here has kind of mimicked this very small couple of weeks of a correction here has mimicked the overall pattern, bullish pattern that I just spoke about in the daily chart. You can see here with it's a double combination again. 3 waves down, a triangle B wave and then 3 waves down again to complete the correction. And we've got a nice spike higher there on Thursday, just like in gold. So 3-wave correction complete, and we're moving up into a 5-wave pattern in wave 3. So the hourly chart, you can see that or actually that you could take that as 3 even, or 5, depending. So it could be a double combination or just a straight flat with a triangle B wave. So off the low, I'm tracking 5 waves up. It could be complete today, but the caveat on that is could be an expanded flat wave 4. Excuse me, an expanded flat wave 4, and then early next week would push back up towards the $15 mark again to complete wave 5. I'd like to see a break of wave 5, or sorry, of $15 in wave 1. But I don't control the market, so whatever the market is going to do, I like the form of the rally so far. So let's look for an impulse wave next week, and we might get a nice low risk entry point. But either way, I am long silver and I'm long gold anyway, so that just not that it makes any difference, but that's just the way it is. Okay, let's get on to 10-year, and I don't have the 10-year chart open. So if I had some elevator music, I'd play that now, but I don't. Okay, let's wait for this to open up. There you can see let's move on to the daily. So the daily chart, we're looking for a move down into a 5th wave of a 3rd wave. So so far so good. We've got that nice thrust out of a triangle, and it seems to be in 5 waves. We were tracking that triangle. So we've got this triangle complete in wave 4, and we got this thrust from a triangle. You could possibly call that as wave 5 complete. I don't like that myself because of the pattern off that low, and also because the previous wave 1 is at 122, and I wouldn't like a large 4th wave to be starting at such close proximity to the wave 1 low. Okay, so let's get down to the 4-hour chart there. So last week we were looking for wave 1 or wave 2 to complete, and a push lower into a wave 3, and we seem to have got that. And right now, well, I was looking for a B wave. You would notice that I haven't updated this chart today because it was kind of away from the house. So it looks like actually wave 1 completed at or near today's low, and next week would suggest a 3-wave pattern to the upside. This is so professional, isn't it? I would expect that looks like a 5-wave pattern down to me. We didn't get a break with that interim 1 and 4, so we were quite close to it, but we didn't get a break with it. So that looks like 5 waves down complete to me into today's low, and next week we should get a 3-wave pattern, counter trend pattern to complete wave 2. Again, the caveat being, is wave 2 there or is wave 2 here? We'll have to work on that on the nightly updates. But the idea that we're moving impulsively off the wave 2 high does kind of suggest that that wave 2 is complete, and that we shouldn't expect a larger flat pattern in wave 2. We've got 3 waves up. If you were to get 3 waves down and then a 5-wave rally, that would suggest 3 waves down, that would suggest a larger wave 2 and a flat. So that'll be 335 correction. So we're kind of in the, let's say, the tracking phase of a bearish signal off the wave 2 high, which again does not augur well for the ability for the US government to refinance a lot of this debt. Seen as so much of the debt in the US is on the short end of the curve. Okay, so for next week, let's look for a three-wave correction higher to complete a possible second wave. And that completes 9 markets. It's so quick, wasn't it? Okay, thanks everybody for hanging with me for the week, and we will meet back here again, hopefully all happy and healthy for another week and a possibly explosive week in the markets. Nobody expects it, so that's why we should expect it. God bless. Have a great weekend. Godspeed, and see you on Monday evening. Bye bye.